Titled Inequality Kills, an Oxfam India report recently said that the country's richest families saw their wealth reach a record high in 2021, while 84% of Indian households saw an income decline during the pandemic. This is called K-shaped economic recovery, which suggests that the rich are getting richer, but the poor are bearing the brunt of the economic disruption caused by the pandemic. This is affecting the purchasing power of those on the lower end of the spectrum. So, apart from the gross domestic product or GDP, which the RBI claims will grow at 8.3% in the fiscal year 2022, there are several proxy indicators that tell us a lot about India's economic growth. One such proxy indicator is the declining sales of two-wheelers. Notably, the sales of two-wheelers in 2021 plunged to the lowest in 9 years. The average inventory at dealerships currently stands at 50 days, against the norm of 25 to 30 days. Economists explain that around 80 to 90% of two-wheeler buyers come from lower income groups, so a protracted slowdown in the sales of such vehicles effectively puts the brakes on the economic recovery in rural India. Devendra Pant, Chief Economist and Head of Public Finance at India Ratings and Research, told Business Standard, two-wheeler sales, a proxy of an economy's well-being, have been slipping for 3 years. The consecutive fall indicates that the economic growth, which has been slowing since FY18, is not equitable. The wage growth in rural India, where the majority of two-wheelers are sold, has been slowing down and hasn't kept pace with inflation. In fact, the prolonged impact of COVID-19 is being seen across vehicle segments. In a recent virtual conference, Kenichi Ayukawa, president of the Society of Indian Automobile Manufacturers, explained that in the quarter ended December 2021, passenger vehicle sales touched the lowest point in 5 years, two-wheelers the bottom in 9 years, commercial vehicles, leaving aside 2020, the lowest in 5 years, and three-wheelers, the worst impacted, tanked to the lowest level in 13 years. We talked to Mitul Shah of Reliance Securities to understand some of the structural reasons behind this decline in auto sales.
So here the scooter segment decline is much deeper, whereas within motorcycle entry level bike segment witnessed much higher decline compared to the premium bike segment. So our understanding here is that the second wave impact, which was slightly deeper and its penetration was in a remote rural. So rural economy got impacted severely compared to urban and compared to last year's situation. And these are the primarily rural centric products which got more pinch of this second wave impact. So recovery in the rural was slightly slower during the past 6 to 7 months. Additionally, untimely monsoon recently, as well as adverse monsoon situation in few regions, it was a super excessive monsoon, few regions witnessed drought. So this also impacted agriculture output to some extent, which has a more impact on the rural demand, which is also visible in the tractor sales. As we all know, the tractor is the primarily rural product only, and which has reported a double-digit decline in last 2-3 months. So this clearly indicates rural impact is more on the economic consumption side, which has a more impact to the two-wheeler segment. Apart from this, two-wheeler is a very price sensitive segment, and price hike taken by these companies roughly in the range of close to 10% in last 1 year, over and above 15 to 20% price hike taken during the BS6 transition. So there is a quite sizable jump, roughly to the tune of 30% in last 2.5 years in the vehicle prices.
As the expert pointed out, the slowdown in the rural economy is largely to blame for the decline in auto sales. The most impact is being felt in entry-level segments for both two-wheelers and passenger vehicles. On the other hand, automakers are planning a host of new launches in the premium SUV segment this year. The share of SUVs in the total passenger vehicles sold in India was 38% last year, compared to 29% in 2020 and just 16% back in 2016. Coupled with the index of consumer sentiments and the rate of employment, the trend in two-wheeler sales offers a useful commentary on India's unequal growth. A recent Business Standard editorial also talked about the need to raise the tax to GDP ratio by 5% over time with corrective measures, such as removing tax deductions on investments for individual taxpayers. Besides this, India needs to create a sufficiently large manufacturing base for labor-intensive products, which will help us create jobs at scale and improve income levels.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.